Hello, Jim here. Selling options is a great way to make some extra income on a monthly basis. Last month was a really good month for me. I made over 12,500 between premium and also interest and dividends. I'll talk about each of those and I'll also share with you my trades, what worked, what didn't work, what strategies I use, and how I literally plan my month. So stay tuned. I think it's going to be well worth your while. Okay, now before I jump into the agenda for this video, I do want to give a quick market update. The Fed came out yesterday and had pretty much good news. They were a little bit worried about inflation, but not too worried, and they believe that the labor market is okay, and they're still just planning 2 cuts later in the year, which was a good impact on the market. The market for the rest of the day yesterday did go up. So we've had several up days. We had Friday was up, Monday was up, and that was the first time in several weeks we'd had 2 consecutive days when the market was up. Now it was also up yesterday, Wednesday, and then today, this morning, it was also up. I haven't been on the market in the last hour, but I believe it may still be up in it's pretty much all the indices. Now, will that continue? I have no idea. I do think we're going to continue with some choppiness as more info comes out about tariffs and some of the other uncertainties. We probably will bounce around a lot. Have we gone to the bottom or have we reached the bottom? Again, I'm not completely sure about that, but I wouldn't be surprised if we have, and we're going to continue to kind of drift upwards. So again, it's really important to stay in the market. If you had gotten out or decided it was too risky for you, you could potentially miss these gains. So if we have hit bottom and things are turning around, the market could regain a lot of what it lost over the last couple of weeks and reach new highs, maybe even by late spring or early summer. So again, it's my 2 cents. The one thing I tell my memberships is the only thing the market will guarantee you is that it's unpredictable. You really never know what it's going to do. So just wanted to share that. It's, my 2 cents. And as always, it's probably only worth 2 cents. So let's jump into the main body. I mentioned in pretty much all my videos that the fundamentals of companies do matter. I'm more of a fundamentals person. I will look at technicals. I'll look at the Bollinger Band. I'll also look at implied volatility to a certain point. But to me, what's most important is the fundamentals. Does the company have a good profitability, good return on equity, return on assets? Do they have, a low debt to equity ratio, meaning they don't have a lot of debt that they have to service? Are they producing a lot of cash flow so that they can run their operations well? All those fundamentals are key. And then also, are they overpriced? Are they too pricey? So if you compare them to their sector, do they have a much higher PE ratio, meaning the sector may have a 20 PE, but they have a 60 PE, so that's a pricey stock. If you're buying them or you're selling puts on them, you're taking a bit more risk because they're overpriced at this time and could drop significantly if the market really does drop even lower than where it is now. And I do believe price matters in the short term, maybe not as much. A stock with a lot of momentum can go way up. We've seen that with Palantir and NVIDIA. But long term, it usually comes back to reality. And it can go both ways. If it's way overpriced, then that price could come down. If it's way underpriced and has been oversold, like a company who has earnings and has done a nosedive, they also will kind of drift back up. So a lot of times with earnings, if the earnings are negative and it drops big time, that stock will drift up and vice versa. So just keep that in mind. It's important to, be sure you're not spending or buying stock or selling puts too expensive. I like to find bargains. My last video, I talked about some bargains that were potentially out there, and there's still even more. And my guess is more opportunities will come up. I especially like to look at a company after earnings. So if they miss earnings, are they then a bargain after they've missed earnings? In a lot of cases, they are, because again, if you pick them up at that much lower price, they'll drift upwards. So if you're selling puts on them, then it's a little bit safer to sell puts. So that's what I wanted to mention for that. Now, I also encourage my members to set goals. I set monthly cash goals. I like to earn a certain amount of premium. It's currently $8,000 per month. I also set goals for dividends and interest. And what's important about that is even during a downturn, you keep trying to trade, keep trying to earn that amount of cash because it'll help you long term. You might have some assignments or you may take some losses, but that's just part of the game. If you're continuing to, you know, gain cash flow through selling cash secured puts or covered calls or iron condors, whatever strategy you might be using, that constant inflow of cash really can be a big difference. And I've tried pretty much to do that. I'm doing it during this correction. I did it during 22. In 22, I ended up doing a lot better than like the S&P 500. If you look at 22 and 23, and I believe even if you include 24, that, and I think a lot of that is due to the premium from these options by selling these options and then having this nice monthly income from the premiums. You end up long term doing a lot better than just owning the indice without trading options. Now, I'm a very safe type of person. I started with one contract, and I went to two, and then on occasion I'll do more than two. I also started trading in just one account. I forget to mention this in a lot of my previous videos, but I started trading in just one of my brokerage accounts. Then I realized after I had a huge tax bill, especially after 21, then I switched to another account and I did most of my puts and what I called my IRA with options. It's only been in the last year, not even a year, that I've done or I've set up all my accounts to actually be able to trade options, which is, which is a big deal. So my returns, I think going forward will be even better. I've also moved my retirement accounts to Fidelity so I can earn the true sweep account. So the cash that I'm using for selling puts, I'm also earning around I think it's 4.1% on a monthly basis. Now you can do that with Schwab and some of the others, but Schwab, you have to move the money in and out, and it's even more so in your retirement accounts because again, you can't easily put more money in your retirement accounts. So they're real particular, but with Fidelity, I can. So that's why I'm able to make quite a bit. I do have a lot of interest coming in my Fidelity account. And again, you'll see that at the end of this video when I share details about my trades and then also how much dividends and how much interest I made. So, and then I like to use, especially during a correction or crash or bear market, what I call my 10% rule. I use it to identify which positions are potentially going to be assigned to me. And it's real simple. So if the stock is 100 or the strike is 100 and the stock is 90 or lower, then I'm concerned that it could be assigned to me. So when it's 10% in the money, then I'm a little bit more cognizant of it and I'll potentially manage that trade, put more effort into managing that trade. If it's less than 10%, I don't typically worry about it as much. I get a lot of members that ask me questions. Hey, this stock is $3 or $4 in the money. What are you going to do? And a lot of times my answer is I'm going to wait and see what happens. And probably 9 times out of 10, that stock will bounce back up and come out of the money again. Not always, and definitely not in a correction as much. But it's kept me from being as fearful. The other part that's also kept me from being fearful is when I look at a company, I want to own it. I have plenty of cash to own it. I'm not, I describe it as a true trader. So I'm an investor and a trader. So on occasion, I'll do trades just to make money, but the companies and the ETFs I'm trading on are companies I want to own. And when you're willing to own them and you believe that they're a good price, meaning they're already at that bargain price, it takes a lot of the pressure off. So when something does get assigned to you, you realize, wow, I've got a really good company and I got a pretty good price, because just the nature of selling a put, especially if you do it like I do at around a 15 delta, it's usually almost like a 10% discount. So just the nature of selling those puts, you're picking up these stocks at a discount. You know, and being patient. Again, I've had a lot of members or subscribers who haven't been patient. They've taken a loss too quickly. The other important point about this too is a lot of the other YouTubers will talk about doing a lot of contracts. That's something I've had members join recently that have gotten themselves in trouble doing too many contracts. So stay safe. Don't do a lot of contracts. Like I said before, I started with one, then I went to two. On occasion, I'll do three or four, usually for inexpensive stocks like Mara or maybe SoFi. I haven't traded SoFi yet, but I'm considering it. Um, but I do very few contracts. Now, sometimes I'll have a position that expires with two contracts next month and then another position that expires a month after that. But I typically don't have more than, say, four contracts out on any specific company. And I'm talking puts primarily. I have a lot of Coca-Cola and I have a lot of covered calls, all different strikes, all different expirations, and I move them around a lot. And I've been able to do that fairly successfully. I don't think I've had a Coke assignment in 3 or 4 years. So just wanted to mention that too. And then during this time when you have a correction or a downturn in the market, um, you know, adjusting the trades and keeping track of why you originally made the trade, originally, the fact that you want to own that company. And then I tried to only adjust it to pick it up at a better price. I'm not typically trying to get out of it or avoiding the ownership. It's usually, well, the price has dropped 20%. I've already got a 10% discount. Well, I want another 5% discount. So I'll adjust the trade. Sometimes I'll turn a vertical put credit spread into a cash secured put and bring it to a level where I'm more willing to own it, even if it's still in the money. AMD is a great example. I've done that. I also did it with Dell. So don't overlook assignment is a great way to manage your trades. A lot of times when I've compared assignment versus just closing it, assignment and then potentially selling the shares, a lot of times we're more profitable than just closing the position outright. So it's usually worth throwing the numbers into a spreadsheet and doing some calculations, to see which is your best choice. So that's the main pieces I wanted to talk about. I usually like to give a little bit of insight and what I've learned over the years, and these are just a few of them. If you join my membership or try my membership, which has been growing quite nicely, I may do a price increase again in early May. Anybody who's already a member will be archived. They'll keep their current pricing, but I like to do it. I do it month to month. I don't require a phone call with me. I also don't force you to join for like a year or anything. And I do have a lot of people that leave and come back. I have a lot of people that switch memberships to a lower membership to a higher membership, and so on and so on. If you want to learn more, details will be in the description. Again, I keep it real simplistic. I'm looking to add more and more to it. I've put some fairly big bucks into Kajabi, and I'm going to add a class that'll be available to the memberships. I'm still doing the Trader Club membership. I may start doing some live trading where people can join me as I'm on the market actually working some trades. So a lot more will be coming in the future. So I just wanted to share that. So next, let's actually jump into the particular trades that I did in February and how it turned out to be a fairly good month, even though it was the start of a correction. So stay tuned. It's going to be worth your while. Okay, now I've opened up my February spreadsheet. This was my planning worksheet from February that I shared with my membership in the beginning of February. And then every Sunday, I typically will update it and also share it with my membership. On the first page, it has trades. The second page, it has the favorites, the companies I like right now. The pricing is updated for the current price. Then I have trade rankings. I go into detail about what trades have not worked well and why, and then also what trades have worked well. And then I have a checklist, things that I like to look at when I pick companies. How do I determine if they're bargains or they're not overpriced? And then I have guidelines. These are guidelines about my trading. For both puts and calls, it talks about ETFs versus stocks. I might use different deltas, different expirations, why I use different deltas and different expirations, just to name a few of the things. And then goals. These are all the different goals that I have. I share how I've done monthly, and I keep track of it. And this, what I typically encourage my members to do is when they grab this planning worksheet, just they typically delete my trades, they put their trades in. They may keep some of my trades that they're really interested in, maybe is a trade that they want to take, um, and then they pretty much track things themselves. I try to keep it really simple. I don't want it to be, very burdensome. And I do make changes over time. So just that's why I share the planning worksheet pretty much every Sunday in the morning. But any updates to it, any updates to the tabs, my members get right off the bat. Um, so, and then I typically will let them know if certain things have already changed. Now you can see at the top, I've got, my 2,000 a weekly goal, 8,000 monthly. I did 8,864. I did have Zoom get assigned to me at one point. I had a couple $100 loss in there, but Zoom has done quite well. It's actually a lot higher than what it was assigned to me now. Not a lot higher, but I think it's a bit higher. So at one point that was a loss, but now I'm not showing it as a loss. But let's go through the trade. So the first trade I did for the month was in my Fidelity IRA. And you'll notice most of my put trades, nearly all of them are in my IRA or my Roth IRA. So in my retirement accounts. So I did XLK. This is the technology ETF, 215, 205, 321. And I still have this trade. I just rolled it in the last couple of days. Brought in 291. It was like 135% return. Required capital is what the broker typically requires you to keep. And then the assignment coverage is it if it's assigned, how much cash you would need for the assignment. Um, then I did NVIDIA on the 4th. This I actually closed. Let's see, did I spend much to close? Oh no, I actually rolled it and I rolled it again. So I brought 302 in. It was almost like a 271% return. So I rolled it and I ended up doing quite a bit of rolls with NVIDIA. I was able to do it with shorter DTEs. That's why that return was so much higher. So this is another one that I rolled. You can see the DTEs are a little bit different. So this one was um, I rolled it from 214 and then I rolled it out to 218, 110, 100. Very profitable trade. This time I brought in 301 and it was a little bit of a lower return. Usually your first trade is you bring the most in. Then when you roll, it's the returns are less. PayPal, this was a new one in my Fidelity Roth, and it actually got assigned to me in March. I believe 100 shares got assigned to me. This was a wheel type trade, 77.50. At the time, it was 74.95, and brought in some pretty good premium, 223. And since this is a cash secured put, it has a much lower premium. Then I did a trade in Zoom that then also got assigned to me. So I got assigned to me pretty quickly. It was 82.77 and I made some pretty good premium with it. So I actually did two trades and then it got assigned to me. So I had brought in close to almost $900. So when I calculated my cost basis, I closed the prior trade, the long put I sold. And then I also sold a covered call. So my cost basis is right around 74. So it worked out well. ASO, Academy Sports, I like them. I've been able to roll them even though they've been in the money for months now. And I've made some pretty good premium. This was a cash secured put, 57.50. And I've pretty much been rolling at the same strike, 57.50. Rolled it 2417 again, kept the same strike, brought in $247. I brought I've made nearly 2,000 on them since I started trading them. And this was like an 11% return. So 22% return in a year just rolling. So even though, um, it, I don't know, I like Academy Sports. That's where I shop. I think they're going to do really well, but all retail has really struggled, especially during the last 6 months or so. Coca-Cola, this was in my broker account. All my Coca-Colas in that account, so I rolled it. This was a new one. I didn't roll it. I ended up closing a bunch last time Coke took a pretty good dive, so I opened up two new ones, and I did it. 67.50 was the strike, expiring on 620 at 27 delta, and I brought in some pretty good premium. I brought in 206 in premium, which is like a 5% return. Now I end up using like $60 cost basis, but my cost basis is much lower. I've owned the Coke stock since I was a teenager. Um, Micron, another roll. I rolled it 95.85, and I think I kept the same strikes. 95.85, brought in another 244, which is like 118% return. I've done quite well with Micron. I also own some of it, and I think my cost basis for the Micron that I own is like 65, so I definitely would not mind owning more. Next is NVIDIA. This was another roll, 119, 109. So I have two, and this is like what I was talking about before. I have two contracts, 110, 100, and then another two contracts, 119, 109. And you can see it was an 18 delta when I went into it. I rolled it out to 321, which this one I just recently rolled again. Brought in 334 in premium, and it was like 171% return. So NVIDIA has just been really good to trade, and I really like it. I like it a whole lot around 100 to 110. That 110, 100 spread has worked out really well. Johnson and Johnson. This is a covered call. It was assigned to me. At one point, it was assigned to me as a loss, but now it's fairly profitable. So I sold a covered call 155, and then I rolled it. I rolled it all the way out to 719.25, and I'll do that with covered calls, especially to bring up the strike price. So I brought it from 155 to 160 and brought in $337 in premium on it. And it was like a 3% return once you use the DTE. And with a covered call, you base it on the total value of the stock. So since I haven't owned it that long, that's why it's only a 3% return. AMD, this is started to come back recently. I think I got up to 107, 108 today, but I rolled this 125. I did get a sign just recently on one of my AMD. It wasn't this one. This one is the one that's 417. So I rolled it out to 417, brought in another 343, which is like an 8% return. I do have another AMD that did get assigned to me. Agilient, I'm not sure I pronounced that right, but it's currently 320, tomorrow's 321, and I'm still trying to figure out how to roll them again. This trade was rolled from 221, same strikes, to 321 with 135, 125, and that's what I still have. I'm having a really tough time rolling it from March into maybe April or May, but I brought in 266 and it had a good return. I think what's happened is a lot of people have spent some big bucks on the puts for them. So it seems to be a lot harder to roll. One thing I'm playing with and is potentially trying to roll out of it to a different stock. I was looking at Broadcom as one example, or maybe like Qualcomm or AMAT or Applied Materials, or maybe even somebody like Amazon. So something I'm playing with. This is Seagate, another stock that's worked out really well. They have really good profitability and just a good company to own. 95.85, 20 delta, and I rolled it. I believe I kept the same strikes, 95.85, and brought in another 264. By this time, I'd brought in 876, 127% return. So all these are good companies. Seagate, I really like. CVS, which was a fairly big assignment and a loss at one point. Again, just like some of the others, it's a very small loss now. So I rolled it. Um, or this is a covered call. So I rolled the covered call and upped it to 70. So I rolled it pretty far out. Then I also upped it. This was a leap and then upped it to 70 to get it out of the money and make it profitable. And I still brought in 326. So if it got assigned to me, it would be almost like $72. So a trade that looked really bad initially has turned out pretty good or pretty well. Hims, I traded them. They shot up. This one, this one I was able to close. Let's see if I put my cost basis. Yeah, it's $4. I paid $4. When it gets that cheap, I just go ahead and close something. Mara's been hammered because of Bitcoin. I still kind of like them, the fact that they own so much Bitcoin. But this was an iron condor that I did. It ended up expiring. The call side expired. I rolled the put side and have been doing fairly well with it. Now I believe it got down to as low as 12 something, like 12.50 or $13. Rolled it to 314, and then since then I've rolled it again. But I brought in 253. That's total premium. I brought in 172. So still need to roll the call side. So yeah, I ended up letting it expire. Corning, which again, another one that's worked out really well. I owned it. It was in the 30s for the longest time. Then suddenly it shot up, which can happen. This is a covered call, so they were assigned to me. And then I've been selling covered calls on them. Still in the money. I rolled it to 55 to get it out of the money and brought in 215, which is almost like a 3.5% return, which I think is pretty much matches its dividend. So for a lot of these covered calls, I like to double the dividends. Google, this was a new Google trade, 175, 165. I brought in 231, which is like 132% return. Been kind of surprised that the premium on Google hasn't been the greatest. Dell, this is another roll. I actually rolled Dell up, which now looking back, it was probably a mistake. I think I had it as low as 105, then I rolled it up, and now I believe it's right around 100 again. But it kind of like AMD, it seems to be coming back. So this one I rolled, kept it as a cash secured put, rolled it out to 417, brought in another 208, but you can see how much I brought in on Dell, almost 4,000, 3778. And this was like a 5% return. And I believe Dell and AMD were both ones that I rolled a vertical put credit spread into a cash secured put and was able to bring the strike down quite a bit. So just something to keep in mind when you're trying to figure out how to deal with some of your in the money positions. Qualcomm, this was another one that closed. Very profitable trade. Let's see what I paid. Paid $10 to close this one. So worked out well. This is Bluebird. This is one of my wheel trades. Did it at 40. And it's funny, it's been around 35 for the longest time, and I want it to get assigned. It's actually going to get assigned to me. I believe I rolled this to 321 or it's 417. So I'm hoping it'll get assigned to me because the covered calls look really good. So I just plan to sell a 40 put and then sell a 40 call and bring in some fairly good income. It's been surprising. So I brought in 1371 on, I believe, how many contracts? Only two? Yeah, two contracts. So I brought in quite a bit. This one I brought 217.36. It was almost like an 18% return just with Bluebird. And if you're not familiar with Bluebird, it's the yellow bus company. They got hammered earlier, I believe earlier this year, maybe in February or maybe January, because I think they had some orders, electric bus orders, but they can swap out different types of engines. So they can do electric, they can do diesel, and then they can do, I can't remember the third type of engine. So pretty interesting company, and it's fairly inexpensive. FCX, this is another wheel trade that I did at 42, it's also been in the money here. You can see it's 36.98. Another one that I want to be assigned to me, but won't for some reason. So I rolled it again out to 321 and brought in 121. So since I've been dealing with this trade, I've made almost $800. And it's very similar to Bluebird, made a 17.6% return. Now, FCX is a mineral mining company. Now, I did another Coca-Cola trade, a roll. I rolled my 65s that were expiring on 6/20 out to 12/18/26, so another leap, increased them to 67.50. And I think here I was trying to bring in some nice cash. I brought in $914. This was only a 2.2% return, primarily because it's a leap. But it's funny when Coke typically will hit the low 70s, then it'll drop down to the low 60s. When that happens, I can close a lot of these, even the leaps, or I can roll them backwards. Next was a fiver trade. This is another wheel trade that I did. This one's actually in my Schwab. This is one of my only or few puts that are in my Schwab. So, and I've been rolling it at 28 and doing pretty well. It's currently right around 25 or 26. Rolled it to 321. And I believe I just recently rolled it again, brought in 175, or 178. Oh, wait, no, 175. I must not have updated it. So these two together is probably what I brought in so far. This was like a 40%. It's a cash secured put, so have done pretty well with it. I believe it's a cash secured put. Yeah, 28. And then next I did Mara. This was another roll. I believe this is in my Fidelity Roth. So I have one in my Fidelity Roth with 4 contracts, one in my IRA with 4 contracts, and now one in my Schwab brokerage with 4 contracts. And it's my way of kind of looking at or learning to deal with Bitcoin, learning a little bit more about the miners. I enjoy reading their yearly report and what they're doing. So it's this one I did have to widen the spread, and I went out to 321, and I brought in a little bit more premium. So I didn't want to get assigned to me at this time, but I do think that Mara will bounce at some point. When I have no idea, but I do think they will. This is another payment processing company, like almost like a PayPal or a Square. They have really good numbers. So, and I brought in some pretty good premium. So I rolled them again, and I did lower widen the spread a little bit. So it was 97.50.90. I lowered it from 95, but I did widen the spread. So my long put is 85, and that allowed me to bring in almost $244. So that's another thing you can do. Sometimes widening the spread will give you some choices. But again, it's the short position that's so important. So lowering that 97.50 to a 95, and again, I'm fine with these getting assigned, but I'd rather them be assigned to me at 95 than 97.50. Plus, in the process, I brought in some nice premium. And this was almost like 175% return, so it worked out well. So next, XYZ. This was a new trade that I did on an XYZ is block or square. I don't know why they changed to XYZ. I don't know. They do some weird things at times. It's probably the CEO that did it. But this expiration 321, and I brought in some pretty good premium, $319, and it was like a 247% return. And I believe I've recently rolled them and did the same thing that I did with 4. I widened the spread a little bit and lowered the strikes again because they dropped all the way down into the high 50s, which I think is a bargain. Mara, another roll in my Fidelity IRA. So I rolled pretty much all of these. I rolled this one also out to 321. Widened the spread a little bit again from 1915 to 1930. Brought in another $153, 86% return. And then I had some expired. BP expired. I had both a covered call, and I opened a new BP, and it expired. It was a vertical put credit spread 28.23. And then I had an IJR ETF that I really like. And I've mentioned before in other videos that most of my ETFs tend to either expire. I had very few get assigned to me. Now that might change. ITB, which is the construction industry, has been hit really hard, so it may get assigned to me. Maybe the first one in over 4 years. So IJR, it also expired. Now we're down to CLS. This was a new trade, 95.85, and it dove after that. It got deep in the money, but I made 296, almost 253% return. And I've been able to roll it again. I believe in March I rolled it again. And then UPS, this was a covered call, 135. I rolled it from 417 to 516 and kept the same strike and brought in 180 more dollars, which is good. They were up that day. They've had kind of a rough month. So I was like, well, let me take advantage and earn a little bit more with the covered calls and lower the cost basis. Now we're at 226 Kins. This is one of my new wheel trades. I did this at 1510 were the strikes. Now Kins is a really small company. They have a great feedback and reviews by Seeking Alpha, but they are a small company. I think they're only like a $120 million company. And I brought in 291, which is pretty good premium. I've been surprised how much premium. So this is probably my best trade for the month. 382%. Again, if you look at Ken's and you want to use it as a wheel trade, just remember it is a very small company. It's like 120 million, but they've been consistent and steady with what they make. Now another NVIDIA trade, I did a roll of my covered call. I have 150 shares that I bought back in 2018, and I just I move the covered call up and down as NVIDIA moves, and I just consistently bring in some nice income. So brought in 238.65. My cost basis is literally on these. Actually, this is for 150 shares, so the cost basis would be even lower. But I believe my cost basis is like $4.80. Like I said, I bought them back in 2018. They were not the powerhouse they are now. Then I did an NTAP. They got hammered, and I thought, wow, great price, but they continued to drop. I believe they may be in the mid to high 80s currently. And so this was a new trade. I brought in 243, and again, another fairly good trade, 105% yearly return. Then I did pins was assigned away from me, so it was assigned to me. I sold. It was the true wheel, so it was I sold the cash secured put. It was assigned to me. I sold covered calls, and then it was assigned away. Became a fairly profitable trade. I think I mentioned it here, but I think I made $500 or something on that one contract with pins. It worked out pretty well. And then my last trade was UPS. It was another covered call roll, 135. This time I increased it to 140. They started coming back late in the month. Made 255 on them. So it was like a 2% return. So UPS is another one that's been beaten down. I think it rebounded and then it dropped big time with earnings recently. And I think it's a bargain stock. It dividends are almost 6%. So that's all my trades. This is how it all broke down. This is what a lot of you are probably waiting to see. So in my brokerages, I made almost 2,000, 1922, which is like a 0.44% monthly. And that's based on my accounts, which are like 440,000. Then my Fidelity IRA, I brought in 6,072. I do more trading in that than anything else. And based on its value, I brought in about 1.48%. In my Fidelity Roth, I brought in 188.69.79, which is again almost, it's like 1.43. So both those were really close to 1.5. Now I've done as high as 3% or as low as 1%. Can I do more? I can, but again, I'm sticking to my goals. I'm trying to make what I make. If I earn what I want to earn for a week, I usually back off the trading. I try not to do too much trading. Now, so total premium was 88.64.77. Then dividends and interest, which were pretty much broken up. I believe it was almost 50-50% for the interest and the dividends. I get more dividends on the Schwab or the Schwab brokerage accounts, and I get more interest, of course, from the Fidelity with that 4%. So my total was 12,536.98 for the month, and daily that would be like 659. Now I did 10 covered calls, I did 8 cash secured puts, and I did 20 vertical put credit spreads. I did do an iron condor. I forgot to mention that here. Daily average again is 1 to 2 trades. I've had some days I don't do any, and I probably average 2 a day. This week I've only done 1 trade a day, especially with, now that we bounced a little bit, it's gotten a little bit easier. But I've been managing a lot of my in the money trades or positions. So some of the notes, the market was open 20 business days. I had 1 day with 4 trades and a few days with 3, and then everything else was 1 or 2. Zoom was a sign and is now very profitable. My cost basis was 74, and now it's pretty close to 77 when I looked earlier today. And then more premium in Schwab due to the wheel trades on Fiverr and Mara. So one thing I definitely are going to start doing is a little bit more of wheel trades. And Fiverr and Mara is still pretty deep in the money, so I don't know how that's going to work out. But for the most part, my wheel trades have been very successful. So that's what I wanted to share with you guys. If I look at required capital, 254,000, and again, I still have a lot of cash in all my accounts to cover my trade, so I try to stay very safe. So let me know what you guys think. Do you do something similar to this? Do you have similar returns? Are you what I call a pure trader, meaning you don't really care to own the stocks? Or are you like me? Are you an investor then a trader, to add more icing on the cake? So, and then also any stocks that you suggest or, anything I might not have mentioned here that you're interested in, please leave a comment. I try to answer almost all my comments within 24 or 48 hours. And as always, thanks for joining me, and I look forward to seeing you next time.